Hi, my name's Rebecca Healey. I'm Senior Analyst with the TABB Group. I have with me today Paul Squires of AXA Investment Managers, who's come and joined me in New York. So firstly, welcome to New York, Paul.
Thank you.
We wanted to discuss today some of the issues that are facing the European equities markets in particular. We have just issued a recent report on that very topic, and obviously one of the main challenges that we see at the moment is the liquidity issue within Europe, and that seems to be putting particular pressure on individuals such as yourself in order to be able to execute your order flow. How are your desk actually addressing some of those issues?
Yeah, I mean, it's definitely true that liquidity is a key focus for us on the buy side. When we, our fund managers are researching companies, meeting the management of those companies, and ultimately investing or de-investing in large positions in those companies. So the order sizes that the buy side traders have is often multiple days worth of volume.
And given that we have sort of like the death of the block, as it were, and that option is becoming less available to you, how are you dealing with that challenge?
It is a challenge, and I think to some extent what we're seeing is a return to kind of seeking capital commitment to sometimes offer that liquidity that isn't sort of easily sourced on the exchanges. And I think there's been increasingly a sort of expenditure on technology on the buy side desk to really try and access all the liquidity around the sort of fragmented markets.
So it's basically coming down to you've either got to be big enough to be able to get the risk prices or the block ability, or essentially you're going to have to invest in the tools and technology to compensate for the lack of the block.
I think that's right, and I think some of the traditional sort of platforms that have enabled the buy side to cross up institutional sized blocks is not as effective as it has been in the past. So I think absolutely the onus is then on making yourself available to alternative ways of executing what you're trying to do.
And would you say then that there's the buy side have a level of responsibility here, and that they should actually become more engaged in using those systems? It's almost like we need to walk the talk as well as saying that we want the blocks. We've actually have to step up and start executing in size ourselves.
I definitely think there's an element to that. I think if you really want to draw it back to basics, if the big institutional players wanted to try and cross liquidity, that would be a very, very
good positive step.
It would be a very positive step, and it would be a very empowering marketplace. But I think that marketplace is not there at the moment. The dynamics of the market have really changed in the last couple of years.
And obviously two main factors of that within Europe, as with the US, is obviously the dark and HFT.
Yes.
But there seems to be a bit of a sea change in terms of people's approach to HFT. We recently published the research that 60% are not in favour of too much more regulation on HFT, given the fact that the liquidity is such an issue in Europe. Would you agree with that?
I would agree that there's concern that if you regulate high-frequency trading too indiscriminately, that fairly crucial chunk of liquidity disappears. And it is it's a significant pool now.
Yeah.
So that's absolutely one cause of that fear. Although I would say that some governance of high frequency trading is essential going forward.
Okay. And in terms of the dark, do you see that the European buy-side traders seem to become more comfortable with trading in the dark?
I mean, I think generally the buy-side would be agnostic as to where they execute their business if liquidity was there. But as you said, liquidity is challenged at the moment. Therefore, you have to kind of look further afield to try and source that liquidity. And it's at that stage where, to some extent, you may be getting liquidity from venues where you're also signalling your flow. And that's where there's a trade-off between liquidity and signalling to the market.
Essentially, this is much more about the buy-side trader having to educate themselves and understand where they're interacting and what's the cost of interacting with that particular flow.
Absolutely, and I think that's where, as well, the sort of the reactions to the discussions of high frequency trading have evolved and progressed. In other words, the knee-jerk reaction that all high frequency trading is bad and toxic has, that those conversations have moved forward,
right?
Because I think we are starting to get much better analysis of that flow.
So we've had conversations about the buy-side trader having to step up more in terms of not expecting perhaps the broker to take care of him at that aspect as they have done in the past. But there also seems to be more industry initiatives coming to the fore. What are some of the more interesting industry initiatives that you've seen of late?
Well, I would say the consolidated tape was the big focus for us at the start of the kind of regulatory discussions, and I would say, having disappeared from the radar for some time, it very much seems to be back on the radar, and I think the guidelines that the FPL communicated recently were very welcome and starting to build the momentum again towards an industry solution to what I think most people would agree is to everyone's benefit, to provide the consolidated tape. And it's interesting that even the European parliamentary text suggested that really, this is one of the issues within the market sort of structure radar from the regulators, that they would be much happier, the industry, providing a solution themselves.
What other initiatives are there out there that people can engage in a more productive manner to get the industry that we want?
I think there has been a lot more engagement than probably people realise, and also, for example, through the IMA, there's been a lot of papers issued through IFAMA, the European Fund Management Association. There was a blueprint for the consolidated tape, which was delivered some time ago. So I think there has been work, but it's always, it's a dynamic dialogue. It's constantly evolving and needing updating and supplementing. So I think the onus is on all of us to really continue to be available and make the effort to do that. We
do have a golden opportunity to take this forward to create a better marketplace for all participants.
True. And the consolidated tape is an example of that, whereby you just don't know what's happening to your order once it's been released into the marketplace a lot of the time. And I think that is a basic requirement to do two things: to have a kind of a harmonised post-trade reporting platform, and also really to enable much better transaction cost analysis. It's an area that has grown in its level of attention dramatically, and yet it's still fundamentally flawed because you can't get proper data.
Absolutely, and data, unfortunately, is the basis of everything now.
It is.
Well, but it's still a very positive step forward, despite the doom and gloom that we hear out of Europe. So thank you very much for your time. Thank you for coming in.
Thank you.
Thank you for watching, and we watch with great interest to see what comes out of Europe in 2013. Okay.